Good morning, everyone. Marty Mazora, March 7th, 2019. Going to keep this one quick this morning. In light of this week's volatility, we had a very volatile day on Monday. Looks like we're having one this morning as well. And then just down days in between. Thought I'd just pop in and interrupt your morning just for a few minutes. Beyond today, I'm going to be, for you clients out there, hard to reach for the next few days. I should have a signal where I'll be, so I'll be checking the markets, and if I think it necessary, I should be able to pop in with some comments on the blog, and clients will, of course, send you an email when I do that. In the meantime, we have the S&P 500. This is our live chart, and you see this morning we are breaching this all-important technical level of the 200-day moving average. Anybody who's technically inclined is paying very close attention to that. If we don't hold that, or if we really move down here for the next couple of days with some momentum, then odds would favor, just technically speaking, from a trading standpoint, that the market continues to move lower. Right here, 2680 or so, looks like some important support, and then you have the 50-day moving average and just other levels along the way. Fundamentally, not a lot has changed in here, so this wouldn't be something that we would jump on from a money management or an investment management perspective and react to and get defensive over. Now it's probably something with new cash that's come in that we would buy incrementally while this is getting shaken out. The bigger problem, though, in the near term that could really have us coming to lower levels, of course, is the thing I continue to harp on, and that's the trade situation, not just with China, but with really the rest of the world as well. This week, the president decided to revoke some favorable trade agreements with India and Turkey. That was really not good timing, frankly. I think that just sent a message to the market that we're not going to be getting friendlier on trade. Doesn't mean we're not going to. I think it was more just a tactic to send a message to China. As I said in yesterday's written blog, I think, frankly, those days need to be over, and they don't really do any good at this point. We are where we are. We've come a long ways. Now, some of this concern right now in the market has to do with the details of a potential deal. I think the market is signaling that anything that falls much short of a complete elimination of newly adopted tariffs, I'm starting to believe would be indeed a sell the news event. So tariffs need to go away, at least the ones that have been added during this administration. And China will be more than willing to get rid of their tariffs on their side. They've made that very clear. Problem, though, comes politically. The president is getting applause from both sides of the aisle for playing tough with China. You might argue that the other side of the aisle knows that if we don't do a deal, it will be politically massively destructive for the president because it'll be destructive for the global economy. And he's going to have to withstand the criticism if he does do what I think needs to be done, and that's a no tariff deal with China. The intellectual property theft, the technology forced transfer, those are issues, but this is not the way to resolve them. This is a way to create a recession and a really bad market in stocks. So we need to pivot to another strategy there that doesn't involve tariffs, regardless of whether they appear to have worked along those negotiating lines around the technology and so forth to this point. It's a Pyrrhic victory, I assure you, if you're concerned about the economy, and if you're concerned about political prospects going forward, quite frankly. So that's where we are today, folks. Clearly, there are other things out there to be concerned about or to pay attention to. This morning, when Mario Draghi of the European Central Bank announced that there's probably going to be no rate increase, as we previously thought there would be in 2019 in Europe, and that they're opening a facility for access to short-term money for the banks for a few months starting a little later this year, which will bring more liquidity or credit into the European economy under a very favorable rate regime. Actually, stocks went from negative to positive on that. I have a general thesis that says central banks are going to be leaning very easy over the months to come, and that's going to be net a positive for equity markets the world over. However, this trade stuff just gets in the way of everything. So we do a deal with China, a no tariff deal. Markets rally, but they'll only rally for a minute if Washington immediately pivots and says, we're now going to play hardball with Europe. Market will tank, I can almost assure you, and that will get their attention, and then that should lead to friendly communications and a quick deal there as well. And again, forgive me for being so single-minded in terms of the catalyst for this, but this is indeed what we're dealing with. So now it's become more than just a trade deal. It's become one where a trade deal has to be one that virtually eliminates all new tariffs. If we get that, I think we have really good things going on going forward. Fundamentally, I like the setup here. I like how we moved into this area. Breadth was amazingly strong. Momentum was good. Volume was good. Right now, these things are beginning to roll over, largely because the sentiment isn't as good as it was here around trade. So we're seeing some concerns and some consolidation of these gains. And frankly, in closing, this should happen anyway. This was a very steep rise, regardless of the news and regardless of everything I'm saying about trade. You would expect some consolidation here. This 200-day moving average, though, makes this very interesting and makes for some volatility, and it could be precarious for the bulls if we break down below that too far, as I already said. Thank you as always for watching and listening, and I will talk to you again very soon. Take care. Bye-bye.